All right, hello everyone. This is DayTraderRockStar from Day Trading Radio doing a market update for the week of May 16th, this Monday. Since the flash crash, we made a pushback right up to the 20-period moving average, and that's a kind of a standard retracement after you get a break of trend or a sell-off. You usually get that flash retracement back up, and we pushed right up against the 20-period moving average, which is the EMA, which is standard on my charts. And you can see just a reaction off of that. We rolled right back over here. And now there's a gap that we left off last Friday to Monday, which is very important on my books. You can't really see it on daily charts because the closing price is inside the price range. But I'm looking at the gap from the close of Friday and the gap up on Monday. So I was watching 1122 areas. First level of support, we actually got down right to that 1126 area. Never made down to 1122, pushed back up. But again, the market, as the point I want to make is the market is still volatile here, and we bounced back up, and we haven't really completed closing those gaps underneath us. We haven't really pulled back. It's a fast pullback. I think we're going to actually continue to grind down here, and eventually stay above the 200-period moving average, close those gaps, and eventually start to put in just a nice little area of trading underneath this line, and we'll push back up towards it, and then we'll end up breaking back up towards that 1176 area. But going forward, it's very difficult to pull the direction out of the hat here, because the market can go in either direction at this point. It's so volatile with the news issues, and especially going into Monday. So I'm not going to make a call on the open on Monday, but I would like to show you some things that really helped me get through the market last week, going out on the intraday chart. Now this is when I broadcast live. I take you'll still see the screen on the website, and this is the screen of the S&P Mini 1 minute chart. And I like to trade my stocks off of the ES Mini, so I could either trade the ES Mini futures, or I could just trade stocks based on the overall market conditions. So I use a set of 5 indicators, and I use them a lot on this 1 minute chart. But what really has been helping me here, instead of calling and going strictly short in this market, I like to just play the pullbacks to a trend line or a multiple indicator setup. The patterns that I'm finding work excellent on these intraday charts is the combination of the W pattern, the inverted head and shoulders, which I use slanted inverted head and shoulders, and the trend lines and the multiple indicator channels that are setting up. And when I say multiple indicators, I'm meaning I want to show you right now when I have the oversold stochastics and a pullback from a trend line onto another trend line, and possibly a moving average or a pivot point also underneath us. So again, this is just starting off at 8:30, and you can see going into the open today, or this was actually on last Thursday, you can see going into the open we had a nice trend line. So whenever we have a trend line down here in the 200-period moving average above us, a 200-period on a 1 minute chart, and it's the exponential moving average, you want to look for that breakout of that trend line and push up to the 200. That's my goal. But remember, the breakout of the 200 usually moves up a little, then comes back and retests. The breakout of the trend line here usually breaks out, comes back and retests, and then either continues or fails. So you want to take the mindset of buying off the trend line. So you're getting the best value right down here, the best risk reward setup here, because the risk is less here. If you drop off here, it's an easy stop. But if you come up to this level, we don't break out, there's no sense of buying there, because you could actually start losing money. So if you could start establishing a trend line underneath it, and then you can start looking at that buying area down the lower trend line. And then when you ever get up to that 200-period moving average intraday, you look for the market to probably pull back. And here's a good example of this pulling back to the lower trend line. So again, this setup is a high quality setup, or high probability setup up to the 200. And as the day ticks on, I continue to monitor it and continue to put trend lines in. So from this low here, and we pulled back, and we started bouncing up, it's easy enough now to put that trend line in here. This trend line always remains here, and what I like to do is just right-click it, extend it all the way so it shows up later in the day. It's very important that I have that trend line here, this first trend line of the day, continue all the way down. So I'm going to actually make it, I'm I'm going to keep it yellow there. I'm going to keep the trend line yellow. Now we have another trend line moving up. So again, we see the market trading in here, and all of a sudden I'm noticing, what am I seeing here? I'm seeing the price level giving me an upper trend line. I see the bottom price level giving me a lower trend line, squeezing up. It's a nice wedge pattern, which is a bearish setup. So during the day, made point of showing this and saying, watch for the downside. This is a nice pattern that you're going to look for a breakdown off of this pattern. So, and again, a rise in wedge pattern usually breaks down about 75% into the pattern. So you don't want to get to the point of the pattern when it starts to close right in, but you want to get into about where you could say 75, 80% through the pattern. So we follow that along, and again, you could actually see us break right down from that, and then about the 75 percentage of the pattern there. Perfect breakdown of that channel. From that point on, I start to develop a new line there, and if that line comes into play later, I'll watch it. So I just put these things in here because this would be the first trend line I would put in here right now. I just put these in here for reference so you could go back. These are trend lines that were in on Thursday when we see them. And now that you have established trend line here, you can start working off of that. All right. And again, the reason we have this trend line now you have an established trend line. 2 points, 2 points. Now you can start working off that trend line. All right. And a break of that trend line here brought us up to the 200. Didn't really get any false breakout here. It just we moved right up, brought us up to the 200 period moving average. That would have been a harder trade to grab because there was no real pullback, and you like to pull back here. But the 200 period moving average, anytime you break that trend line, you look for that move to the 200 and the pullback. And again, I just put this trend line in, not at this point. But when this point starts right here, you put that trend line in and you start working with that trend line. So we're following that up, and all right, and right at this point here, and it's hard to actually see this. The important level is you're starting to see this. You can see this, and over here is the important level right here. So you have what we call left shoulder. Here's your head, and sometimes it's a double topping head here. And this right here, right when that forms right here, you can start to see that slanted head and shoulders pattern. And whenever you have an upside trend line like this, and that lower high here, basically it's a lower high, and that's a change of trend possibly happen. Combined with that trend line, you got to watch for that downside break. So you got that nice downside break. It's very clear, slanted head and shoulders pattern. And again, these are just the patterns I like to look for during the day. And I'm not going crazy here, buying stocks here or buying stocks here. I'm waiting for this setup. So at this point, I said, all right, watch for the breakdown of this trend line. Trend line breaks down again. And now, we're going into the latter part of the day. And again, you could be short here if you wanted, but I rather, again, buy on the pullback, give me a more high probability bounce area. And what I look to do is take 3, maybe 4 these trades a day for a point to 2 points, carrying 2 cars or 2 contracts. And, so I'm letting this all play out here. I'm not really showing the direction. I don't know if we're going to bounce here. If you get in here and you're going to bounce, you get shaken out. So I see this trend line all of a sudden coming back into my view. I also see there's a pivot area here, and I see the market selling off. And we go through the pivot here, but we come right down to the lower trend line. And I go back and I say, well, what is this green trend line from? I go all the way back and I see that this green trend line was this nice little channel here, this nice little W pattern or this wedge pattern that broke to the upside. And this was a very established 1, 2, 3 point pattern. And so we just followed, and it was retested. And whenever something gets retested, it's like it irons it up. It puts it in stone. It puts it in cement. It really becomes a viable trend line later on because you broke through, but then you retested it. So it makes it. It's not like the market came back down to here. It came right back to here, which has been holding up. So that trend line now becomes a viable trend line. And that's the important rule right there. That retest right there. That fast little retest. So we go all the way back out to where we were, because I wanted to go back and actually see where that was. And I said, all right, we're going to take that trade here. This is a very strong trend line. This is most likely we're going to come down and push. There's another trend line underneath that. That was another thing. And you look at how they converge. So this area is a big area for me. I took a trade there, had a nice bounce off of that. Took it right into 20. That was another 2-point trade. And again, it actually came back, retested the lower trend line again, and bounced off it again. So very important level. Then the market closed. And that was the end of the day. But That's what works in this market. You know, intraday, you're looking for those channel plays. You're looking for the slanted, inverted, headed shoulders, and as a basing pattern, you're also looking for the head and shoulders topping pattern, but upward trend lines, channels, and you have to have the stochastics, the full stochastic setup, and you know, anything else that's going to work with you. Patterns, trend lines, stochastics, and moving averages. There's 4 of the top 5 indicators that I use, and I look for the important patterns, the inverted head and shoulders, like the W pattern, wedges, channels, and that's about it. It gets simple. Wait for your setup. Your odds of taking a successful trade are going to be greatly increased because of this. You're not going to get into the chop and stuff, and you're actually going to be able to see some market reversals. This was really micromanaging this chart and showing this, but during the day I'm overlooking the whole thing for bigger patterns, and also using the 5-minute chart on the S&P here. So just, you know, and eyeballing that for bigger channels. And this was actually on Friday. So Friday, very flat day here. Monday should be a good trading day. So if should pick that up. Later on, I'm going to send out the 10 for 1,000 watch list for Monday or for next week. And again, there's not going to be big setups here because the market's still very volatile. But I'm going to really, again, tighten up the focus list to really stocks that are really setting up good with tight trend lines and stocks that are holding up relative strength versus the pullback here. So I'll look to get that out probably tomorrow afternoon. So come by the site anytime and check it out. DayTradingRadio.com.